The disciplined trader, Mark Douglas. Two traders read the same books and study the same charts. A year later, one of them is up and the other has blown the account. Their knowledge was identical, and the only thing that separated them was whether they could act on it while real money was on the line. Core thesis. Mark Douglas wrote The Disciplined Trader in 1990. It is the earlier and more mechanical of his two great works. Where his later book sets out the finished psychology of the probabilistic trader, this one shows the machinery underneath, the habits and the mental frames, and the daily practice of becoming disciplined in the first place. His central claim is blunt. Most trading failure is not a knowledge problem. The trader who loses can read the same support break and the same momentum divergence as the trader who profits. What divides them is the ability to act on what they know while fear is pressing on them, and that ability is built rather than born. Douglas insists that discipline is not a moral virtue or a matter of simply trying harder. It is a piece of cognitive infrastructure. You build it through specific habits, repeat it under specific conditions until it runs on its own. Lean on raw willpower instead, and you will eventually fail, because willpower drains away under stress, and every trade is taken under stress. Two minds at the screen. Douglas draws a sharp line between two mental modes that most traders blur together. The first is the analyst, who studies the chart, weighs the odds, produces a forecast. The analyst is either right or wrong, and the only feedback that matters is whether the prediction came true. The second is the trader, who takes a setup, decides whether to commit real risk, and then executes the plan. The trader does not care about being right on any single call, and the only feedback is whether the plan was followed. The trap is that most people stay in analyst mode even while a position is open. Say you are long, with a stop set 20 points below the market. Price starts drifting toward it, and the analyst in you whispers that the level looks like it will hold and the sellers seem tired. Almost without deciding to, you slide the stop lower to give the trade room. That single nudge is the whole failure in miniature. You stopped managing your plan and went back to forming an opinion, under stress, to avoid a feeling. Once you are in a trade, your job is to manage the plan you already made, not to keep reopening the debate. This is also where a live mentor earns its keep. The moment a position opens, Osiris Capital trading desk flips into trader mode with you. It stops hunting fresh setups on that market and coaches only the plan you already made, the trail, the press, or the clean exit. So the analyst never gets back behind them in the middle of a trade. Loss is information. The most expensive mistake a trader makes is treating a loss as a personal failure. When the stop gets hit, the amateur hears a verdict on themselves. They overcorrect and cut the next good trade short, or they rebel and pile straight back in to win the money back before dinner. Douglas reframes the loss completely. A loss is simply information, and it tells you something about the market, the system, or your own execution. The shift he teaches is quiet but powerful. A single losing trade is one sample drawn from a distribution, and the edge lives in the distribution across many trades, not in any one of them. So the loss was not a surprise at all. It was expected, and it was priced in before you ever clicked. The real lesson lives in the calm review afterwards, in what you executed well and what you can sharpen, and never in the sting of the red number itself. Discipline is a habit. Douglas frames set of installable habits rather than a test of willpower, and the method is deliberately narrow. You pick a single rule to install, and only one, something concrete like never moving a stop away from the market. You commit to executing that one rule across your run of trades with no exceptions, whatever the outcome. And you write down a plain yes or no after every trade, recording whether you actually kept it. Something specific happens along the way. Somewhere around the 8th to the 13th clean repetition, the resistance to the rule begins to melt. Push past 30 consistent reps and it stops feeling like a rule at all. You are no longer a trader forcing yourself to hold a stop. You are simply a trader who holds stops, and the behavior has quietly become part of who you are. That is the entire point. Discipline is not about becoming a stronger person. It is about stacking enough repetitions that the right move costs you no effort. Osiris Desk runs this exact protocol as a living system. Every clean, planned trade advances a discipline cycle, and a single broken rule resets the count to 1, with the slip named and its cost logged. The habit is never left to memory or good intentions. It is tracked trade by trade until it holds on its own, the foundational habits. Beneath everything else, Douglas places 4 foundational habits, and every other rule you have ever been taught grows out of one of them. The first is to trust your edge. If you have genuinely tested the system and know it wins across a run of trades, doubt in the middle of a live position is just the analyst climbing back into the driver's seat. The second is to follow your plan. The plan was written calm, and any revision made in the heat of the trade is written in fear, and the calm version is almost always the wiser one. The third is to never take a loss personally, because a loss is a sample from a distribution, and not a judgment on your worth. The fourth is to accept the market as it is rather than as you wish it to be. It owes you no bounce, and it does not care whether you deserve a win. So you trade the tape in front of you, and not the one you were hoping for. Every famous rule flows straight out of these four. Refusing to average into a loser, refusing to yank a stop, letting a winner run. Each one is simply a foundational habit applied to a single moment. Why insight is not enough. There is a cycle that every trader knows. You read a sharp book, you feel lit up, you trade cleanly for a week, and then you slide back into the old patterns. Douglas confronts it directly. Insight on its own does not change behavior, because an insight that has not been drilled into a habit dissolves the moment the next emotional shock arrives. His prescription is exact. You change one habit at a time, since stacking three at once almost guarantees that all three collapse. You make the habit visible on paper, because if you cannot say for certain whether you kept the rule on trade 7, then you never really installed it. And you accept that the early repetitions feel uncomfortable, because that discomfort is the work itself, the friction of a new habit shoving an old one out of the way. One thing is worth knowing in advance. The resistance peaks just before the habit sets. Around the 8th to the 10th trade, you will feel a strong pull to break the rule and move the stop just this once. That pull is not a warning to stop, it is the last resistance of the old wiring giving way. Hold the line there, and the trades that follow will feel as though a steadier person is placing them. The roots of self-sabotage. Douglas catalogs the specific mental patterns that quietly drain accounts, and the danger is that each one feels perfectly reasonable in the moment. There is confirmation bias, where once you are and you go hunting only for the evidence that you are right and wave away everything that says you are wrong. There is the anchor to your entry price, where you quietly decide that the price you paid was the fair price. So every tick against you feels like an insult to argue with, rather than the market simply telling you where it now is. The deadliest one is the refusal to realize a loss. A loss does not feel real until you actually close the trade, so you keep it open to keep it unreal, and the stop quietly drifts. That one reflex is the engine behind the most expensive error in trading, because a small and manageable loss slowly swells into the one that hurts for a month. There is the hunger for closure, where you grab a small profit just to be done and get the trade out of your head, and in doing so you sell off the larger asymmetric move for pocket change. And there is recency bias, where the last trade colors the next. After a winner, you are tempted to oversize, and after a loser, you are tempted to shrink or skip the very next valid setup. Both reactions let the previous trade make the decision for you. These patterns are exactly what Osiris' desk is built to catch in the moment. It learns a trader's recurring leaks, the chase, the moved stop, the revenge entry. And when one starts to form, it says so out loud, before the click rather than after the damage. The two faces of fear. Douglas treats fear as the emotion that shapes most trading decisions, usually without the trader ever noticing it move, and he splits it into two kinds. Useful fear is respect for what the market can genuinely do to you. It is what sets a real stop, caps your size, and keeps you following your rules, and the trader who survives carries it in the right proportion. Destructive fear is a different thing entirely. It is the fear of being wrong, of missing out, of looking foolish, of handing back a profit you can already see on the screen. And it sits underneath the whole catalog of self-sabotage. Most struggling traders have the balance exactly backwards. They carry too little useful fear, so they oversize and lean on a mental stop they will never actually honor. And they carry far too much destructive fear, so they bail at the first flicker of green and duck good setups that merely resemble a recent loss. The whole task is to turn the useful fear up and the destructive fear down. The disciplined mind. Douglas paints the destination clearly so that you know what you are working toward. Once the habits are installed, the disciplined trader takes a valid setup without any inner negotiation and honors a stop the instant it is hit. They let winners run instead of grabbing early closure. And they review each trade as a data point rather than a verdict on themselves. Their internal state stays roughly level across winning streaks and losing streaks alike. They feel no need for the market's approval, and they have lost the hunger to be right. They operate from a long horizon view of expectancy rather than a trade-by-trade scorecard. None of this is dressed up as enlightenment. Douglas presents it as a specific mental state that any trader can reach by running the habit protocol consistently across a few hundred trades. The aim was never to win every trade. The aim is to reach this state, because only from here can your edge finally express itself without you interfering. The path to discipline. Douglas is honest that the road is not straight and takes longer than anyone expects, and it tends to move through recognizable stages. First comes the accumulation of knowledge, the reading and studying and simulating, where the trader believes they are getting ready but is in truth still just an analyst. Then comes the first real money, where all that knowledge gets short-circuited by emotion. The losses arrive that should not have arrived, and the gap between knowing and doing becomes impossible to ignore. After that comes the system hopping phase, where the trader swaps method after method in search of the one that works. This misreads the problem entirely, because it was never the system, it was the execution. The hardest moment comes when the trader finally accepts that the leak is in their own execution and not in the chart or the indicator, and most people quit right here. Those who continue reach the stage of installing habits, one at a time through the discomfort and the resistance, until each rule becomes identity. Beyond that lies the final stage, operating from the disciplined state, where the technical edge is at last free to work across the distribution. Bottom line, if his later book tells you what mindset the disciplined trader holds, this earlier one tells you how to install it. And they are best read as a pair. The insight was never the finish line, the habit is. Douglas hands you a protocol that is narrow and repeatable, and it turns fragile good intentions into durable identity. Run it once, all the way through, and the rest of professional trading still look far simpler than it did. A trading career is actually built on rules like these, one clean repetition at a time, long after the excitement of learning them has faded. Osiris Capital built Osiris Desk as its flagship, an advanced platform for trader development and disciplined trade management. Osiris Desk does not leave this book on a shelf, because it studies these lessons as a working method. It runs Douglas's protocol in real time at the screen, tracking the discipline cycle trade by trade, grading every closed position on process rather than outcome, and coaching the plan from entry to exit until the disciplined state he describes is simply how you trade.